Hey everybody, today is April 11th, 2023, and today we're going to talk about the stock market and where I think the stock market is heading for the remainder of the week ahead of CPI data coming out tomorrow. And before we begin this discussion, please read the disclaimer and you can pause this video as you read it. Okay, so like I just said, the CPI report is going to come out tomorrow, and it's very critical because this whole the last year and a half, we basically have had rising inflation, and the whole narrative has been, the Federal Reserve raising interest rates, and that's put a lot of downward pressure on the markets, right? This is this is SPY, the ETF that tracks the S&P 500, right? So we had this bear market last year, which basically started at the beginning of 2022 and bottomed out, at least for now, in October of 2022. And we've basically been going sideways, right? I've talked about how we're sort of in this sideways pattern that's lasted for almost a year now. I actually talked about this in my last video last week. I also made a post on Twitter on Thursday. And by the way, if you're not following me on Twitter, be sure to follow me on Twitter, EddieLux_. And yeah, so we basically been ranging sideways basically for 11 months now, 12 months if we stay in this rectangle in May. And what I said was that as long as we continue to range sideways, this actually is better for the bulls than for the bears, right? There's been a lot of people who've been saying that we still might have a recession, we still might see the market crash to make lower lows, and that is definitely possible. But for now, we have to make the best decision that we can based on what the price action is telling us. And the price action is basically going sideways, right? We've sort of had deviations from this range, right, to the upside and to the downside, right? But for the most part, we've basically stayed within this range, within this rectangle that I drawn over here. So right now, we are seeing an attempt to move up to the resistance level, right? I said I defined the resistance level at 4,200 and the support level at 3,800, and we are now looking to retest 4,200 resistance level, which is just a couple percentages above, right? It's right here. And as you can see, we sort of notice how the boundary also lines up with these Fibonacci support levels, right? Which I drew from the top, the all-time high top, to the October low over here, right? We've sort of been, so the rectangle that I drew also lines up pretty well with the Fibonacci support and resistance levels, and we've basically come down to retest over the last several months. And we've been able to hold this Fibonacci support level. So I think that the market right now is trying to move up and retest not only this Fibonacci resistance level, right, around 4,200, also what I said, around the boundary, the upper boundary, right, the resistance level, but also the local swing high over here, right? If we're able to take this out, then I do think that we will likely continue to move higher to try to take out maybe this next local high, right, 4,600, and then if we're able to take out that, then retest the all-time high that we set back in late 2021, right, early 2022. So let's look at the fear and greed index, right? So this is very interesting because there's been a lot of people talking about how there's still quite a few people, a lot of professional analysts who think the market is still going to crash, that the Fed will have to keep raising interest rates, and that's going to put downward pressure. And this whole thing is sideways. Even though I just showed you this has been going sideways, people are still calling this a bear market rally or whatever, even though we've been going sideways for almost a year now, right? But yes, it is still possible that the market can turn down lower, right? This is earnings season right now. If earnings season is horrendous, then yeah, that can put downward pressure on on the stock market, right? Because a lot of the companies are in the S&P 500. But at the same time, we also have CPI coming out tomorrow. If CPI is really hot, the Fed might still be forced to raise interest rates. And I talked about in my last video, I still think that they still have room for another 25 basis point rise in the next meeting, but also another 25. But I think that once they raise it another 50 basis points overall, maybe probably 25 over the next two meetings, bringing the terminal rate just above 5%. I think that's probably gonna pause right there. They might not cut rates this year, but I think that they'll probably pause sometime between now and maybe June or summer of this year. But of course, the most important thing is the inflation data, right? CPI. We need the inflation. We need inflation to continue going down, right? And so that's the most important thing in terms of what is the narrative for the market today is right, the CPI data and the Fed raising or pausing interest rate hikes. So yeah, so last week I talked about how I thought that the market was going to pull back a little bit and fill some of these gaps. So we've actually done a pretty good job just holding this level. So I do think that if CPI is good, if CPI is not hot tomorrow, I think the market is going to predict that either the Fed is going to pause rates or they're going to raise it very little, right? And that's probably going to see, we're probably going to see a huge surge up to retest this resistance level, right? But if CPI is really hot tomorrow, worse than expected, then we might come down to these support levels, right? The 50, 100, and 200-day moving averages, and also to fill these gaps. So it's not necessarily a bad thing. I mean, we've basically been going sideways for a year now. So if the report is hot tomorrow, it's not necessarily, I wouldn't like panic or anything, because we've basically been going sideways, but the bulls have managed to hold these levels. So as you can see, since we've had a local bottom since October, we've made higher lows, right? Higher lows. So as long as, if the CPI report is hot tomorrow and we see a pullback, as long as we're able to defend this Fibonacci support level, right? If we don't take out this local low, right? If we're able to hold this level, then that'll be very bullish, right? And essentially we will have been going sideways for a year. So that's very critical. If the CPI report is worse than expected, but like I said, if the CPI report is better than expected, or it's starting to cool, right, then of course we'll see the market probably surge higher on optimism, right, that the Fed will probably either pause or not raise interest rates as much as expected. Or yeah, VIX. Interestingly, there was a report the other day where the VIX has had the highest amount of people shorting via the ES mini futures. Let's see if I have it here. Yeah, right here. There's been a record amount of shorting on the ES mini futures contracts since 2011. And just really quickly, I just want to show you what happened in 2011. Actually, let me move to a cleaner chart for you guys. So the last time we've had this much short interest, this is just the S&P, just because it's cleaner. For the ES mini S&P 500 futures was in November of 2011, right? And as you can see, in November 2011, we had a red candle, right? We saw, basically, if you zoom in, you'll see that, sorry about that. You'll see how, right here, November 2011, we saw a huge plunge, probably on the massive short selling, but then the market recovered. And then after that, we had like 4 consecutive green monthly candles, right? And this just shows that just because a lot of professionals are short selling doesn't necessarily mean the market has to go down, right? Like I said, there was a report that said that there's the most amount of short selling in the E-mini S&P futures market since November 2011. So if the CPI report is not as hot as expected, if it's starting to cool down, if inflation is starting to go down, we might see a massive short squeeze that pushes the stock market higher. So that's another potential catalyst, right? If the CPI report tomorrow is good, and we'll definitely update you. I'll put up another chart on Thursday on Twitter. So definitely make sure you follow me on Twitter, @eddielux_, and yeah, we'll see how the CPI report is, and we'll definitely update you on the technical analysis, the chart, and any predictions going forward, depending on what the information that we have comes out going forward. Okay, so that's it for today. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, subscribe for updates. I appreciate all your support. Thank you again, and have a great day.